Hey there, my name is John Stevenson. Welcome to the Guaranteed Retirement Guy Show. Today we're going to be talking about bonus annuities. Are they too good to be true? Are they worth it? How do they work? All right, so if you're being sold one of these, they can be very good or they can not be very good. Just depends on what you're looking for. If you're looking for just growth, straight growth, market protection, no income. I mean, maybe you'll take withdrawals, which is fine. I'm not talking about guaranteed lifetime income. I'm just talking about just a straight bare bones fixed index annuity. Then I would recommend highly against it, unless you're going to use it for like Roth conversions. Then yes, that can be a good thing. Okay, because there are annuities out there that'll pay you a 20% bonus. And if you got $1 million to convert, you got $200,000 bonus going in there. That's pretty nice because you can use that to offset your taxes. That can be good. And I do recommend those, and I have put those together for clients. I have videos that talk about that as well. But if you're just looking for a bonus just because it's a cool bonus, and you're looking, yeah, look at all this money I'm going to get. I'm going to put $1 million in. I'm going to get 20%. Yeah, that's great. The problem is with a lot of these bonuses, is the growth is throttled after that. Like you don't have a ton of growth, maybe 3%. Okay. So if you're looking for more than 3% growth in an annuity every year, don't buy a bonus. Okay. That's all I have to say about that. But I'm going to share my screen and actually illustrate this for you so you can see how it will look. I'll show you the income ones as well. We can look at those. When it comes to income or even replacements, if you need to replace a policy and it has surrender charges, you have to have a bonus. You have to have a premium bonus, not just a bonus. You can get a lot of bonus products that'll give you a bonus for your income, which is great. But you have to have a premium bonus, actual bonus money on the money you pay in to cover your surrender charges. Otherwise, you cannot replace your policy. Okay, so just remember that. All right, so looking at my screen, I've got $750,000. Someone's in Washington, they're 60 years old, and it's a joint payout, okay? And the spouse is 62. So they're gonna take income in 7 years at 67, and they're just thinking, hey, we'd like to buy an annuity. We want as much lifetime income as possible, and we wanna take it at the same time as we're starting our Social Security. Okay, great. So looking at that, we can see here are the highest payouts. These are annual. But there's great payouts, okay? If we're looking at the highest company, ClearSpring is it. $90,000, $927 a year. Okay, you got Delaware, you got Corebridge. Corebridge is good. They're a little bit higher rated and they're 100 years old. You got Nationwide, which is even higher rated and it's literally the same. And then if you look at American Equity, F&G, all good options. So is Equitrust. They're just not as high as rated. And they got Midland. Midland is good too. They can be competitive. It just depends on the state, your age, and also depends on how competitive they're choosing to be at that time. So, but when we're looking at highest lifetime payout right now, ClearSpring is the most competitive, and it works out really, really well for you. So I love this. I love being able to have as high of a lifetime income as possible. But at the same time, if I'm focused on the bonus, I don't really care. I want the income. Okay. And so you can see some of these are high bonuses. Look at this, 25% income-based bonus, 25% income-based bonus. But somehow this one is higher. It's like 8%. You're like, well, wait a second. How are you giving me higher income if it's lower bonus? It's very simple. It's because there's more to the bonus when you're looking at income. Okay. So yeah, they give you a lower bonus. But look at this. It's 1.388 times 6.55. They have a benefit base that grows large, and they have a large lifetime withdrawal rate. That's what gives you that income. Okay, that's how it works. So you go down here and you look at this. It is 8% compounded roll-up. That's really nice after an 8% base bonus. Okay, that's important, but also withdrawal rate's important. Now you look at these other ones and say, well, they have a 25% base bonus. Why are they less? Why are they $3,000 less? Well, they just do their numbers differently. I mean, it's a great sales pitch. You say, hey, 25% bonus. Look at that. Your benefit base is going to be over $1 million. Yeah, okay, big deal. It's going to grow to 1.48. Wow, that's bigger than the other one. Oh, look, lifetime withdrawal rate, 5.94. That's the issue. The withdrawal rate is lower. Okay, so yeah, bonus annuities can be good, and it's just. It depends on what you're looking for, okay? If you're looking for income, it doesn't matter, okay? There's a lot of factors to take into effect. Now, if you have to replace it and you're looking for highest income, you have to have a bonus. You have to have a premium bonus, not an income-based bonus. That's fine. You can have that, but you need a premium bonus. So now we're just kind of go down here and say, all right, well, which one has a premium bonus? All right, got a lot more. See, so some of them do. Look at that, 5% premium bonus. Okay, 7% premium bonus, 10% premium bonus. All right, so now I just go over here and say, I want to look at All the ones that have premium bonuses only. Then it'll just cut out all those other ones. There you go. All right, so American Equity did have one. They had a 14%. So that's pretty nice. So it's still pretty decent income. So if you're looking to replace something and you have to have a bonus, this is perfect, okay? And that's how that works. And that's the best for income, okay? It's not the best for growth, but it's best for income. And most people want the income. But you can see here, here's the bonus. It's $855,000. That's the account balance when you put the money in. That's pretty nice. And then you can see if there's no growth, that account balance gets eaten up. Or if there is growth, that account balance will grow a little bit, but not by much, okay? Again, the only thing that's important is this, 1.4 times 571. That's what's important, okay? All right, now let's go back and we'll say, okay, well, what about these growth products? I'm being sold all these wonderful these bonuses, okay? These wonderful growth annuities. And I have this huge bonus. Why aren't you showing me a bonus, John? Well, I'll show you, okay? For growth annuities, it's not worth it. So I'll go up here and I will just say, premium bonus, I want one. In fact, I not only want one, I want it to be above 10%. Okay, just give you an example. There you go. Got some decent ones. Look at that, 21%. That's pretty good. So we'll go in here and say, wow, look at these numbers. I mean, wow, 15%. I'd love to have that, right? So you look at this and say, okay, here's the bonus. $907,000 balance. That's real. That money really will be there. But is there a catch? Of course there is. Look, there's a rider charge. There's the fees. So, and you got that. And then here's what the account balance will look like at the end of 10 years if there's zero growth. I mean, you're not going to be very happy if that's what happened, but that could happen. Probably won't, but it could. Then they show you this wonderful growth rate. It's going to grow after this bonus to $3 million. You're like, wow, that's like 3 times the value in 10 years. That's like beating the stock market. Of course, you know where I'm going with this. It's definitely too good to be true, okay? And you look at this, and guys will sell these all the time based off of these projections, which is just ridiculous. So you look at these allocations. I'll show you what I mean. Okay, where are they? Where's the money here? So we look down here. All right, they got it in this 2-year NASDAQ Premier point-to-point. Live since 2025. Well, guess what? That hasn't even had any real-world experience ever. It's just back-tested, okay? Guess what? I can back-test something. I've done it. I can go buy a program like TradeStation, and I can plug in some numbers and back-test something to make it look pretty, and it'll take me 10 minutes, okay? And now all of a sudden, I've got this super awesome plan. It's going to be great. I can take to investors, and I say, hey, look at this. This is going to work in the real world. Give me $1 million. The problem is, this is a lot of times what happens to these. They do these great projections. They create these indexes, and they create, these names that we all know, BlackRock, NASDAQ, but they're just variations of those index. They're not the actual index. So they give you these huge, participation rates, 95%, 185%, and then they base their growth projections off of that. And that's what guys will sell you on. And they'll say, yeah, it's going to work great. And I'm like, no, it's not going to work great. It's not. Okay. And on top of that, you should be doing 2-year. I mean, if you do 2-year, you're going to capture, yes, 2-year point to point, but you're also going to capture the up and the down. So if it goes up and then goes down, and at the end of that, you wouldn't have made anything. Okay. I like to have 1-year options because then it resets, it gets credited that 1 year, and then it goes on to the next year. That way you're locking in gains more frequently. So I'm going to go back to that. I'm going to say, well, if I'm going to do this, I want a real index, not one of these new ones. Do you have any? Yes, you do. S&P 500, but they're capping it at 2.5%, plus they're charging you a fee of 1.5%. Okay, that's horrible. So my net's like 1. Forget that. You see what I mean? Like you could look at this. Like if I was going to do any of these, I'd do this one. Okay, 35%. Okay, this is good. 1-year S&P dividend aristocrats. Yeah, that's something that's been live for longer at least. But if I'm going to do something real, I'm going to do this. But here's the issue, is that 35 participation rate might go to 10, okay? They have these minimums. So that's why when people reach out to me, I recommend companies that I know work well, okay? Because you got 800 options just right here. So I'm going to go in here and I'm going to say, well, I don't care about the premium bonus because I want growth. Okay. Now I just wanted to show you premium bonuses are great, but they don't give you a ton of growth. They will throttle your future earnings. They don't give you hardly any of the indexes because they give you that huge bonus. That is the growth. But even on top of that, that is not even vested for 10 years. Okay. It vests slowly over that 10-year period because that's the surrender charge period. So you have to remember that too. You can't just take that money out. So that's why bonuses are great if you want to use it for like Roth conversions and spread it out. It's perfect. Okay. So now I'll go back and say, what does it look like with Lincoln? Because I happen to know Lincoln does very well with these, and they give you more, and they're growth products. They're very good. and their participation rates are decent, and they keep them higher than others for longer periods of time, which is really important too, because you don't want to buy an annuity and have it, have the participation rate drop through the floor. So you look at this one, say, all right, based off of the S&P, which is what we're doing the real index, they're giving you 55%, way better than the other one. But based off of that, and they're showing you here's what it looks like if the S&P does nothing. Obviously, your money stays how it is. But if it grows, it's going to grow probably to 1.6. Okay, that's a whole lot lower than the 2.2 3 million. Actually, the other one was showing me. I'm like, wow, John, I'm not going to do this. That other advisor was showing me this one that will give me $3 million. I'm like, all right, go ahead. It's never going to give it to you, ever. Okay, you're using an index and they're using you as a guinea pig. Don't do it. Okay, you got to choose an annuity with the right company, with the right index that will give you the growth. That way, you have a ton of growth. And it's not showing you as much as a bonus one, but it is real. Okay, and it's more likely than the other one. So that's what I'd recommend. So when you're looking at bonuses, they do serve a purpose and they can be very good for different things, as we talked about before, for replacements, for Roth conversions. Okay, if you lost a ton of money in the market and you just want to feel whole, that can be nice too. But really, if your objective is long-term growth, don't choose a bonus. Okay, make sure that you're choosing the annuity that gives you the highest growth over the long term. Okay, and that's typically not a bonus product. That is a product that gives you the raw index, the real index, and does not throttle it like the other bonus products do. Okay, so I hope that helps. So anyways, if you are thinking about purchasing an annuity for yourself and you're looking for someone who's transparent, who's going to show you everything, who has access to everything, then book a call with me. Okay, there's a link below this video that goes directly to my calendar and we'll get on a Zoom meeting. Otherwise, you can go to my website, johnstevenson.com. You can check out the rates yourself. And then if you'd like to book a call there, you can as well. So happy to help. Would love to help you if that's what you're looking for. Again, I appreciate you. If you like the video, subscribe, share, comment below, and we'll see you next time.